Again, thank you very much everyone for attending today. Obviously LCG's weekly market analysis webinar taking place here. My name is Jasper Lawler, and so the aim here just to run through some of the key charting levels throughout the week and a bit of a brief discussion of some of the big news going on while we're at it. Of course, if you have any questions anytime, fire them through to me. Any other markets you want me to cover, certainly just let me know and I'm happy to do that. I'm hoping at this point that everyone has read through the risk warning on the screen. As I was just mentioning before we started officially there's a lot of stuff going on this week, a lot of interesting things. If you don't follow me on Twitter, I could actually bring up this, let's see, am I able to do that? Suddenly going out on a tangent here. Let's see if I can bring this up. So I tweeted this out today. So this is a little summary on some of the big news that's happening this week. Some of it more just stock market related, but I'll definitely highlight the fact that we broke out to 3-month highs in the dollar last week, and obviously correspondingly 3-month lows in Eurodollar. If you've been following the IBEX, we've been mentioning it in the last few week ahead videos, potentially getting to the point now where the IBEX begins a bit of catch up with the other European indices. I can pull that chart up just to show you there's quite an interesting resistance level going on in the IBEX, which may trigger the beginning of that catch-up process. Obviously, it's all very much a fluid situation, as they would say, as you would say in Spain. So it could all roll over still. Brent crude. Top $60 a barrel last week. Following along with our, what we've been discussing in the last few webinars. There's been some big breakout in oil, and that looks like it's set to continue. And then news on the other side of the pond, just breaking at the moment, is that Paul Manafort, Trump's campaign manager, is going to get charged in the Trump Russia collusion situation, so that's obviously ongoing, but it doesn't look like at the moment that's going to affect the tax cuts in the US. They're actually set to be announced this week, and not only that, Trump is also expected to announce the next Fed chair. Looks like probably Jerome Powell is the favorite at this point. He basically is a sort of continuation of Yellen, but Trump likes him because it's going to be slow, gradual rate hikes, which has been good for the market, but also he's looking at deregulating the financial sector, which Trump has promised to do as well. Yellen a bit more opposed to it. That's probably why she's not going to get a second term. And obviously we've got the Bank of all of us in the UK, got the Bank of England this week, where we're looking at our first rate hike in the UK for over a decade, so that's a pretty big deal. So let me get rid of that again. There's so I'll try and flip back and forth to this, but yeah, I've just got trying to do a little kind of summary of the way I'm thinking of some of the key markets here. Looking at the kind of trend on the daily chart, I should mention. So the weekly and more short-term trends obviously can vary from this, but if you're treating the daily chart as your kind of focus, maybe you want to take your short-term trends in the direction of the daily chart, or in fact you're trading off the daily chart, then this would be something to refer to. So I'll try and flip back and forth to this slide as and when we go through the platform. So let's jump straight into it now. So here's our weekly chart for the Eurodollar. And as I mentioned, basically we had this breakout to 3-month lows last week after the ECB meeting. And so 117 has basically been the sort of, a little bit below 117, but in essence the big round numbers 117 is the neckline of what looks now like a broken head and shoulders pattern. And so if the euro is going to recover from here, it really needs to get back through that 117 neckline, and so that's the primary resistance that we're looking at, as mentioned here. And I think this breakout to the downside that we're seeing could follow through down to 115, and where I got this little vertical line here, which would suggest perhaps a move even below 113, is that basically that was just the height of this head and shoulders pattern. So if you have that here, and then you just project that from the breakout, which maybe you can see a bit easier if I drop down to the daily chart. You can see here's the lows here. Very sort of, you know, it looks like a crude analysis, but actually this kind of mirrored effect actually is really quite potent in markets. And so we've been in this range, and it's actually quite reasonable to expect that this downside, after this range held for so long, to follow on through down to the bottom of the range here. So obviously a lot of stuff happening this week in terms of the next Fed pick, etc. So this dollar bull market could reverse, but at the moment it's looking like we're getting a bit of a dollar rally going here, and that means some of the other currencies could be set to fall. So looking for 117 as maybe the sort of line in the sand for that, but on the downside we're looking at 115, perhaps 113, and the 50% retracement is just a little bit below that projection as well. You can see here the rally that we had up in euro, halfway pullback, takes us to, you know, between 112 and 113. So switching gears to sterling, which is obviously the interesting one in the context of the Bank of England this week. To me, we've got this rising trend line, which I mention every week in sterling, which has kept me positive on sterling. And I think at this point the market is still rising, but I'm a little bit worried about what's been taking place. I think this correction that we saw with those 3 big down weeks that kind of took us down sub 131 was a bit of a kind of negative sign for the market, and this consolidation here, the fact that we hadn't really been able to solidly push through the 20-period moving average, to me suggests that it looks more like a consolidation before a break lower than it does a bottoming pattern. But at the moment, as I said, it is a range, and that's basically how I've categorized it here, because I don't think we're not making consistent higher lows or high highs and higher lows, or lower lows and lower highs. It's a range, kind of making both. And so basically the support and the resistance is either side of this range, and the big level really is 130. We haven't actually got down to there yet, but it's if we fell down from here, you could kind of see that actually that's probably where we'd come in and affect this rising trend line. So whether that gives way or not will be the key as to whether the pound holds up. At the moment, it's kind of looking like it won't. We had a good move higher, but it just seems like the momentum is not quite there. And even though we pushed right up here on the weekly chart and we're holding above the 50 level, it's starting to soften a bit at the moment, I think. But let's see what happens. This will be certainly a key week. So dollar yen. So obviously had a really strong week the week before last, a bullish engulfing week, which took us into this declining trend line. Last week we've obviously had a little kind of spinning top doji-like formation, and we've stalled out above this declining trend line, basically at the range high. So that was that's my question here I'm posing. And does the top of this range hold? At the moment it has held. Basically the resistance we're talking about here is a show below 114.50. If I kind of zoom out a bit, you can kind of see here it's basically these two highs. We've run in those two highs again. We've had a little pullback, taking us back into this short-term range, and basically we're sitting above this declining trend line. To me, the trend is still up here. We haven't, what's probably concerning is that if you talk about 70 as an overbought level, we haven't got above 70 over the last couple of occasions. So momentum seems to be like it's fading. So if we do drop back through the broken trend line, and to me, if we take out 113.50, that would be acceptable. If we drop below 113, then I think then you have to start thinking that probably this breakout isn't taking place, and then we get a pullback perhaps then down to 112. Obviously, I didn't mention, but we do have the Bank of Japan meeting this week as well. So that in combination with the Fed meeting, everything that's happening with the dollar, will pretty much determine which way this market eventually turns. If we are looking at a dollar bull market, then really you would think that 113 holds. So this could be an interesting test of that dollar bull market, looking straight here at dollar yen. Just quickly, for those who follow euro against sterling, we dropped through the 88.50 level last week, and so even though we didn't put up a higher high, the body of last week's candle engulfed the previous weeks, and we took out 2 weeks worth of support. It makes sense to me, and I've said this in the last couple of webinars, that after this big downdraft, we're getting some kind of pullback, and then we get the next leg of the downdraft while we're at this, because we've basically hit a double top at the 92.50 level. So last week to me was a confirmation of that idea, and I would imagine it makes sense that we come down to test the 87.50 low, and so while we could remain in a range and eventually bottom out from this big drop, I would suspect we come back down to the bottom of the range and at some point break it out, take it out as we get the next leg of this big drop in the euro against the pound. So the FTSE is very interesting at the moment. I've been burnt on multiple occasions trying to pick tops in the FTSE, but I mean there's a fair bit of evidence at this point that the FTSE is starting to roll over. We've struggled at this 7550 resistance, which was the basically we haven't made it back up through into record highs, and 7550 has been the resistance on the last 3-4 occasions. We had a big drop down to 7450, which was the old kind of range high, bounced nicely from that, but if you look at where the series of these lows were on a daily chart basis, and where we got that big drop from, we've dropped from there again with a shooting star reversal from last Friday, and you can see that kind of correlates with trying to get back through the 20-day moving average and failing to do so. So we're still above the 50 mark, but it looks like we're turning and making an attempt to drop through it. We're through Friday's low as we speak. So a bit of evidence here that we're going to drop through 7450 and maybe come down to retest the bottom of the range near 7300. That would obviously typically correspond with a rally in the pound. A lot of these gains in the FTSE are thanks to the softness in sterling. So Bank of England raises rates, we get a rally in the pound, the FTSE would drop. If it's a bit of a dovish hike and the pound drops, then actually maybe we've already put in the lows here at 7450 and the FTSE, it's just a little dip and we rally up to perhaps even new record highs. So they're the two probable scenarios I'll be looking at here. Maybe it just makes sense that there's no clear breakout and a bit of softness with the uncertainty around the rate hike and how the Bank of England position it. Maybe we're just biding our time before we rally up again. And again, if I switch gears to these next indices, for example, if I slip through to another part of Europe, the Germany 30, we're getting a breakout here. So, I've mentioned, I've the same question here for the UK 100 as there is for dollar yen. Does the top of the range hold? Germany 30, it's a breakout. Wall Street, a tight range after multiple breakouts. So if the FTSE 100 were to drop, it'd certainly be going against the general trend. And the DAX is looking really strong at the moment, the Germany 30. And so logically, we had a long period of consolidation with 13,100 being the kind of peak of it. So if we did get back towards the 13,100, the old resistance you would think would turn into new support. And then the bottom of that old range, 12 being 12,900, will probably be a level where actually the uptrend would lose a fair bit of steam were we to get through there. So if you want to wait for a pullback, it's 13,100, but at the moment the momentum is quite strong, and we may not even get too far below 13,200. Now switching gears to gold, I'm calling this a range at the moment. because we haven't taken out the lows, and it's not super clear cut whether we're bottoming or continuing the downtrend. Excuse me. So basically 1260, but you know, you can call it 1262 is right bang there on the kind of low. 1261, 1262 is the key support level. But overall, it's a similar situation where we've had a big downdraft, and that to me wasn't this wasn't a move to me supportive of particularly higher prices. So we dropped dramatically through 1300, popped up to 1300, and we've dipped down, and we're holding this old low for the time being. But again, it kind of probably falls back to this dollar rally scenario. If the top in Eurodollar tells us there's a bit of a dollar rally taking place, then that's generally not a good environment for gold, particularly while stocks seem to be breaking out as well. So a few things building up together to suggest it's not the best environment for gold. And if we pull out to, what was I looking at here? Oh yeah, so on a sort of monthly trend basis, you can still see here that we're basing out. We popped above the 50 level, and now we're kind of ranging around the 50 level. And so basically we've just come up to this 1370, which looks like it's the base, looks like a sort of cup and handle type breakout, potentially eventually about to happen. But until we get that solid break through 13750, there's certainly plenty of possibility for gold to pull back within this range, maybe even down to the year lows around 1150. So if 1262 holds and we get a pushback through 1280, basically where that kind of bearish engulfing candle happened last week, then that would certainly be, you know, where the 20-day moving average takes place as well. That would be a lot more characteristic of a bottom taking place here, and we can actually look for the market to move higher. But my base case scenario at the moment is that we eventually see a break of this support in line with the kind of falling moving average and basically the lower lows and lower highs. Oh, sorry to hear about the boiler, Roland. Yeah, the recording should be up in within a couple of hours or so. So yeah, if you're following us on YouTube, you should get a notification when the recording goes up. Obviously applies to anyone else who wants to rewatch it as well. So lastly but not least, Brent crude. So this is the downsloping trend line that we've been referencing for a while. Here was the attempt at a little top of the range pullback from 59, but actually we've held the broken trend line, and now we've rallied up through $60. So to me, again, just kind of using the height of this pattern here, I would say that kind of makes sense for a push up towards $65 a barrel. There isn't, I mean, if you look at the previous price action, it's pretty clear skies above. Maybe this first bump after the big drop in 2014, sorry, maybe that could do something around 62, 70-ish. But to me, I think probably the next round number, now that we've taken out 60, would be for people to try and attempt to get Brent crude back up to 60, 65. And just looking at the RSI here quickly before we finish, you can see that we've been kind of stalling out around the kind of 65 level, which can often happen in a range trading environment or even in a downtrend. You'll see the market fall before it gets to the 70 overbought level, but now we're pushing up into overbought territory, which traditional analysis would tell you that that's time to sell, but really it's an indication of strength and momentum in the market, telling you basically the trend is higher. And we've seen a big breakout here, and I think I think crude has legs, and we've obviously got the OPEC meeting in November, and for the time being, I think the expectation is they're going to cut production, and that's generally good for reducing the supply glut in the oil market. Yep, I can cover the Kiwi dollar. Let's see, I think I've got that chart up here. I did actually want to mention this anyway, yeah, because we're basically right on the bottom of the range. So I think this week is actually key in terms of how the candlestick action looks for whether we are putting in a base. Now, we've had some dramatic declines, obviously based on the politics in New Zealand. We've had a change up at the government, more of a left-leaning Labour government in power in New Zealand now, typically not looked on too favourably by currency markets. And so, bigger picture, we had that, let's see if I can just zoom out the weekly chart, we had a huge plummet in the New Zealand dollar, and we've kind of pulled back from that, but 75 has proved to be pretty solid resistance, and may turn out to be a kind of double top of this little pullback that we've had on a longer term basis. And so if we do take out 68.50, to me, structurally, looking at this longer term chart, it would make sense it would come back down here to basically test the 60 level. So, you know, looking at 850 pips, if that plays out, obviously won't happen in a straight line, but it's quite a key level we're at the moment, which is why I would say that maybe there's a chance that actually we get a little pop for the time being, because, you know, big players will probably be buying in at this level. It's just the question is whether it holds or not. Sterling yen, yeah, we can certainly look at that. Do I have that chart? Right, let's close out the S&P for now. Haven't mentioned the multiple kind of big US tech stocks coming out this week. There's only time to cover so many charts, but I'm planning on a snapshot video covering some of those US tech stocks, including Apple. So check that out if you can. GBP. So obviously getting a nice little rally today by the looks of it. Obviously the pound has been generally quite well bid because of the expectation of a rate hike. So looking at this weekly chart for sterling yen, it's looking like we've broken out from a really solid long-term resistance, held it as support, and we're kind of stuttering a bit at the moment. You know, bigger picture, it looks like we should be in for a bigger recovery of this big downswing that we had. But I think the yen is a little bit neutral at the moment. Obviously, if there's some big kind of risk-off moment in markets, the yen will get some demand and this pound yen will pull back a bit. But I don't expect the Bank of Japan to do much. So to really whether sterling gets a lift off against the dollar and the euro should determine whether this pair gets the lift off too. I don't think this really shows any particular signs of weakness. I think we're just consolidating above the big support. So while we're above that 148, I would call it, while we're above there, it looks pretty good. And then you know, I think you're just looking for confirmations of positivity on the shorter term charts. So at the moment, bit of a pullback, testing the 20-day moving average. If we hold it today, take out last week's high from Friday, probably this little pullback's over, and we can look for a continued move higher with a first test of 153, I suppose. So I'm going to call it a day there, everyone. Thank you very much for attending. I hope that was of some use. And of course, yeah, follow us on YouTube so you can get the recording. Thanks a lot, everyone. Happy trading this week. Jasper signing out.